Hey everyone, welcome to this week's Smart Investing Weekly Stock Analysis. A lot of news on AMC lately, and people saying the fundamentals don't matter anymore. I think we should kind of take a look at the fundamentals here for AMC Entertainment Holdings. What do you think?
Hey, so you're so right. I mean, everybody's kind of just looking at the stock going up and up and up, and we're going to take a different angle of this, a different view of it, and say, hey, let's step back here and look at the profitability and the balance sheet of this company. Say, does this really make sense? Because you could get stuck with this stock long term, and you want to make sure if you do, you've got some strong fundamentals there. So let's go ahead. We'll talk about some valuation ratios here on the business, and we'll start off with the current PE. And there is no PE because there's no earnings there, but that is the same as the industry. The whole industry is having difficulty. Now, here's a good comparison. When you look at the price to sales, 55 times what you're paying for the sales. That's well above the industry at 6.1. There is no price to tangible book value, which means if you take away all the intangible assets, no value to this company at all. That is the same as the industry. This is a very difficult industry. You probably want to avoid the whole industry here. Price of cash flow, very important for business cash flow. No cash flow for AMC as well. The industry does have a price of cash flow of 68 times. AMC does not pay a dividend. Industry does pay a small dividend of 0.4%. I was surprised when I saw that. Here is some big news. Let's talk about the sales year over year. They are down for AMC 91%. Now compare that, because again, a number means nothing at all. Let's have something to compare it to. The industry is down 6.1%. So, not even 1/10 of what AMC is down. Earnings per share, not looking as bad as I thought here. Year over year for the last 12 months, the earnings fell by 1.1%. Industry was down 57.9%. Very important for a company is how strong are they? We look at the financial strength. Two important things we look at: current ratio tells you the capability of the company paying off the next 12 months of liabilities using 12 months of assets. It's only 0.64, so they don't even have a year worth of that. The industry is at 1.33, much better than the industry than AMC. No debt to equity because the company has no equity, so that's not a good thing. Industry does have a debt to equity of 83. We see return on equity, nothing there because there is no equity. Net profit margin for AC&C, I hope you're sitting down and you see this, negative 663.47 versus 9.7 for the industry. And let's talk about that. It means for every dollar they bring in, they lose. Is that $660 they lose for every dollar they bring in? Or
That's
66?
it's crazy.
No matter how you look at it, it's a terrible number. You want to make money when you have a business, not lose money. And then we do look at receivable turnover as well for the last 12 months. It was 4.22, not quite as good as the industry of 5.5. And industry receivable turnover is very important. Chase, what do you got for the earnings going forward on this company?
Yeah, so we're going to go ahead and look forward a little bit for this business. And I will say it is interesting. I mean, we have seen them issue a lot of stock lately. So I do think they'll be able to resolve some of the issues on the balance sheet in terms of paying off some debt and also increasing liquidity. But you have to remember, whenever a company issues shares, that dilutes the current shareholders. Now you own less of that business because there's more shareholders out there, something to be very cognizant of. Now let's take a look at the current price for AMC. It is $42.81. See here, the 52-week high, $72.62. And wow, this is just laughable. The 52-week low is $1.91. So it is, again, part of those meme stocks that have done tremendously well. But gosh, I feel bad for that person that bought it at
Yeah, I
$72.60.
do as well.
But going forward, what we like to look at here for an estimate on the earnings per share, we go out normally to December 2022. We're going to look at the non-GAAP numbers here, what we call the pre-except. You see they lose, or they're expected to still lose 81 cents per share. So we can't even derive a target sell price on this business. I mean, I do think, people, oh, it's a short squeeze. It's, that's why I'm buying it. I do worry it is part of that greater fool theory. Who's going to be the last person holding it? And this thing can still fall very, very quickly.